Are we headed for 2008 all over again? In the last few years, home prices have skyrocketed up more than 30% in some metros. And that was just last year. In the last month alone, mortgage interest rates are up more than a full percent, pushing millions of Americans out of the housing market. We are seeing the worst inflation in nearly 40 years, and the housing market in 2022 has started off with a bang, looking much like it did in 2021. It's like people are zombies, mindlessly buying houses with no thought of a future housing market crash. This market simply can't be sustained. With so many similarities to the 2008 financial crisis, it would appear that we're in another housing bubble. So, is the housing market finally going to crash? Today, I'm going to give you the most in-depth housing market prediction for 2022 using the most recent market data and statistics. Whether you're looking to buy or sell real estate, this video will give you a solid understanding of what the market is now and where it is headed. Hi, I'm Tyler the Real Estate Guy, and if you'd like to stay up to date on latest real estate tips and trends, subscribe to my channel below and ring that little bell. If you have questions or comments at any time during this video, please leave a message below. If you're looking to buy, sell, build a home, or invest in Utah real estate, please feel free to call or text. I would love to talk with you. No doubt, this real estate market is confusing. It ran when many thought it was going to crash, and it continues to run despite growing concerns about the economy, mortgage rates, and affordability. So today, I'm going to answer the following questions. Number one, should I buy a house or should I wait? Number two, should I sell my house now or should I wait? And number three, are we in a housing bubble or is the housing market going to continue to run? Okay, let's start by talking about the key indicators. You know, the things that really affect the housing market. As many of you already know, home prices generally increase when you have high population growth, low mortgage interest rates, increasing wages, and what is likely the main driver in our current market, the lack of inventory. Sorry, Milli Vanilli, I don't think you can blame this one on the rain. Really, much of the blame can be placed on the home builders, as nationwide they have been severely underbuilding since the market crash in 2008. It's kind of hard to criticize them because they got burnt hard when the market crashed. And cautious human nature kind of takes over. Whitesnake summed it up in one sentence. Okay, so the factors that put a strain on home values are inflation, low affordability, and an oversupply of housing, which is largely to blame on the housing market crash of 2008, as millions of Americans purchased homes on speculation, with banks fraudulently giving loans to people who couldn't afford the payment. It's kind of like giving your kid as much candy and cake as they want because it's their birthday.
Oh, that feels better.
Sorry, that was probably too graphic. Anyway, when the dust settled, home prices had fallen 33%, leaving a huge percentage of Americans in financial ruin. The crash of 2008 happened so fast and wreaked so much havoc, and really, it didn't happen all that long ago, so a lot of people are still feeling trepidation. It's human nature. But I can't help but to smile when I hear people say, what goes up must come down. The law of gravity does not apply to the housing market. Never has, and it never will. And for the record, home prices have always increased over time. But skyrocketing home prices, among other things, has a lot of similarities to 2008. So many assume that we're in a housing bubble or that the market's going to crash. But you know what happens when we assume, right? You make an ass out of you and me. Anyway, I'm gonna show you why what's happening today is nothing like what happened in 2008. And this is why it's important to follow trusted, well-researched individuals like me who strive to bring you the most honest and up-to-date housing market predictions. That's your cue to hit the subscribe button below, by the way. Seriously though, if you haven't already, hit that little red button below. Now, didn't that feel good? Thanks, I really appreciate you. Okay, so the last few years have been crazy. Without deep research, it's hard to judge what's going to happen next. During the pandemic, the housing market exploded when many thought it would crash. With so much confusion and misinformation right in the middle of it all, in April of 2020, I shot a video explaining why you need to buy a house right now. If you'd taken my advice and purchased a home at that time just 2 years ago, you'd likely be sitting on $100,000 of equity. And in some parts of the country, a lot more than that. And you'd likely have a mortgage rate below 3%, leaving you with a house payment well within your budget and significantly lower than what it would cost to rent a similar property. Over the last 2 years, home prices have been increasing at more than 30% in most parts of the country. When you factor in the recent surge in mortgage rates, millions of Americans can no longer afford to buy a home. And millions upon millions more have seen their buying power decline significantly, leaving them with less attractive options. They will now have to settle for a smaller or older home, often in a less desirable location. Surely, the housing market is going to crash, right? Well, not so fast. The factors that cause the housing market to crash or even correct are things like high inflation and high mortgage rates. The recent spike in mortgage rates have a lot of people panicking. Those super low rates that we saw in 2001, below 3%, are most likely never to return. Inflation is the worst that we've seen in 40 years. Looking at this chart, you can see how quickly inflation is increasing. Unfortunately, no one knows when it will stop. This is the 30-year fixed borrow rate in the United States. If you've never seen this chart, it's shocking to see rates around 18% in the early 1980s. Looking in the bottom right-hand corner, you'll see that we were at historic lows in 2021, really just a few months ago. Viewing this chart, things don't look so bad, but let's zoom in, looking at how quickly rates have increased, now above 5%. It's enough to make your stomach turn. Even the top economists did not see this coming. Honestly, I didn't either, but I knew rates would not stay at historic lows for long. And that's why at the beginning of this year, I warned you that it might not be a good time to build a home. Thankfully, over the last few years, wages have increased and a lot of people have been able to save for down payment. But inflation can quickly erase wage growth and eat away at your savings. That's why inflation is one of the key indicators that we may see a correction in home pricing. The Washington Post broke it down nicely with this chart showing how the strong earnings growth is utterly snuffed out by inflation. Without a doubt, especially if inflation continues to get worse, it will start to negatively affect the US housing market. Heck, maybe it already has. This next chart shows US home price growth over the last 20 years. This red indicates the Great Recession. Looking to the right, you'll notice a sudden spike in housing prices over the last few years. We are seeing a drastically sharper increase in home prices over the last few years than what we were seeing before the Great Recession. This is another indicator that the housing market could change here in the near future. Just like the stock market, the housing market has its ups and downs, but home prices in the US increase on average by about 5% per year. In a recent article by CNN on skyrocketing home prices, they reported home values rose by 18.8% in 2021, the biggest increase in 34 years. Phoenix, Tampa Bay, and Miami saw the highest annual gains, with price increases in Phoenix hitting 32.5%. That is insane. Year over year, prices for several cities here in Utah also saw increases by more than 30%. So depending on where you live, you could be sitting on massive amounts of equity even if you've only owned the home for a few years. Danielle Hale, Realtor.com's chief economist, said a marked change may be ahead for growth as rising mortgage rates eat into home buyers' purchasing power. She continued, with home prices expected to continue rising, affordability will increasingly challenge 2022 buyers as a decade-long underbuilding trend has left the housing market 5.8 million homes short of household growth. This chart shows the housing starts over the last 20 years. It's important to note how many fewer homes have been built per year since the crash in 2008 compared to how many homes were being built before the recession. I think this chart illustrates it even better. It shows how many homes were being built in the US by decade in the millions. As a nation, in the decade extending from 2010 through 2019, we built less homes than we did in the 1940s and 21.3 million fewer houses than in the previous decade. That is crazy. Yes, home starts are up significantly over the last few years, but recent labor and material shortages have drastically slowed the rate at which homes can be built. As a new home construction specialist, I have a solid understanding of the home build process. The normal construction time frame for a single family home from contract to closing has always been 8 to 10 months. Over the last year or so, we've seen that time frame for many home builders extend beyond 18 months. If you're thinking about building a home, or you've already started, I've got loads of videos to guide you through the process. These videos will likely save you money and a whole lot of frustration. Anyway, at some point, the number of available homes will meet or exceed demand, and that is most likely the moment when you'll see pricing stability and, in some markets, home price reductions. A major clue to figuring out if the housing market will crash is by looking at this chart, which compares mortgage debt service payments as a percentage of disposable income. You can see that in 2007, 2008, it was insanely high. And today, it's incredibly low. For those of you that don't speak nerd, it's the cash required to pay back the principal and interest of outstanding debt over a particular period of time. So if this chart is a true indicator, we're looking pretty dang good. The recent extended period of time with these crazy low mortgage interest rates has allowed many Americans to refinance to shorter term loans at a much lower mortgage interest rate. This drastically decreases the chance that they'll default on their loan. And this is why you see this extreme drop. You can see that just a few months ago, we were sitting at the lowest total since the early 1980s. This chart is one of the biggest indicators that the housing market will not crash. Once again, look at the insanely low debt today versus 2007. Thanks to record low mortgage rates, most homeowners in America have very affordable mortgage payments, and thanks to the drastic increase in home values, many US homeowners are sitting on loads of equity. So should there be another housing crisis or even personal financial difficulties, I guarantee you that these homeowners will fight tooth and nail to keep those houses. Even if they can no longer make the payment and they fell behind, they could just sell the home and walk away with plenty of cash in their pockets. And if home prices drop by 33%, like they did from 2008 to 2011 in the financial crisis, home values would not drop lower than what most people owe. Now, clearly those buying a home today won't have the same opportunity for equity gain, and increased mortgage rates will put them at higher risk. Will there be foreclosures? Yes, we've already seen that happen, and there are certainly more on the way. But the number of foreclosures will hardly scratch the surface of the 5.8 million shortage of homes. It's also important to understand that increasing mortgage rates have little to no effect on those who are paying cash or putting down hundreds of thousands of dollars. Thanks to COVID, many Americans now have the freedom to work from home, and a lot of them are moving to more affordable locations. For instance, a resident of San Francisco might sell a smaller, older home for $1.2 million, move to Utah, and pay cash for a brand new home with a 3-car garage and all the fixins. This is pretty much an everyday story here in Utah, and it's happening all over the country. It's also important to note increasing house prices and rising interest rates have virtually no effect on those who already own a home. If you're looking to buy a home in 2022, you should know that there are still plenty of people out there that can qualify to buy a home at these prices, even with these higher interest rates. So be prepared for multiple offer situations, especially in the spring and likely into summer. Good news, the market won't be as crazy as it was in 2021, though it might kind of feel like it. It's unlikely home prices will decrease. And in most metros, home values should increase by single-digit percentages, probably in the 4 to 7% range. Obviously more in the hotter markets, all because we're suffering from lack of inventory. For those who are thinking about selling your home, I have a warning for you. Waiting to sell your house could cost you a small fortune. Why? Because we are in desperate need of available homes right now, which means you should be able to sell your home way above market value. And these crazy home price increases are unsustainable, especially with increasing mortgage rates. If the market corrects, home prices could decrease and you might be forced to sell your house below market value. There are actually loads of reasons why you should sell your home right now. But this video is already longer than I intended. So if you're thinking about selling your home, you'll want to watch 10 reasons you should sell your home right now. I'll put a link to that video in the description below. In short, you can expect that mortgage rates will continue to increase through 2022 along with home prices. And houses will continue to sell most likely well into 2023. If you're qualified and ready to go, I recommend buying a house sooner than later. But don't panic or submit an offer way over the asking price. I've seen and heard a lot of crazy stories of people offering tens of thousands of dollars higher than needed to get the property that they want. Over the last few years, I've witnessed desperate buyers make loads of other mistakes when trying to purchase a house in this crazy market, including removing their inspection and appraisal contingencies. It's true, that is what it might take to get the home that you want, but that will significantly increase your risk. And that is why I strongly recommend that you hire a real estate agent to guide you through the process of buying a home. I know what you're thinking.
Of course he's going to say that. He's a real estate agent.
Yes, I know that because I read your comments all the time. But a professional realtor, one who's actively helping people buy and sell homes, can help you avoid pitfalls. Assist you in presenting a strong offer while making sure that you don't overpay, and they can save you a lot of time by helping you quickly identify homes in your search criteria. The best part, you don't have to pay a buyer's agent a single dime. It's true, the seller agrees to pay the listing agent a certain amount before the home is listed. And that commission is split with the buyer's agent. In most situations, you won't save money. As a matter of fact, you'll often pay more by not having professional representation. If you're ready to buy a home, you'll want to watch why you need a real estate agent when buying a home. Look for that link below as well. I know that I've recommended a lot of videos, and I'm not trying to push them on you. I strive to keep my videos short and concise. So instead of going in depth on things that I've already talked about, those who want more information can simply click on those links, and I can get through my video quicker. Okay, so what does it all mean? Is the housing market going to crash? And if so, when? Or is the housing market going to continue to run and run? Well, clearly, I'm not a prophet. I don't even have a beard. But numbers don't lie. Looking at the charts, the housing market is not going to crash, barring some kind of natural catastrophe, a political disaster, or some other unforeseen event. But by looking at the numbers and the current trends, it's highly likely homes will continue to sell through 2022, and home prices will likely continue to rise. For those of you who qualify to purchase a home, your window of opportunity is quickly closing. I recommend you purchase a home sooner than later. Why? Mortgage rates. Increasing rates will likely wipe out any kind of future decline in home prices. In other words, if home prices drop by $50,000, but mortgage rates increase to 7.5%, your monthly house payment would be much higher than if you just bought a home today. Over the last 4 years, on this channel, I've strongly urged people to buy a house, explaining all the advantages of home ownership. Inflation is accelerating the rate at which things are changing. One of the best ways to hedge against inflation is by owning real estate or Bitcoin. Long-term inflation is a real concern, and I sincerely do not want to see you get left behind. But I want to urge caution. What we're seeing today is unsustainable, and the housing market is unhealthy. That means things could change quick. Make sure you have a firm understanding of your local market before you dive in, and make sure you speak to a trusted real estate advisor in your area. Now, I do sometimes get comments from those who think it's a terrible time to buy a home. And honestly, I love hearing from you all, no matter what your opinion is. But I'm telling you with all the sincerity and belief in my heart, this will be the last chance for millions of you to buy a home. If you miss this window, the market could pass you by and you may be stuck in a rental for many years. When the market shifts, and at some point it will, I promise to keep you updated. I always have my eye on market conditions, and I will continue to provide the most accurate real estate news and updates. That's why you subscribe to this channel. Well, that, and because I'm ridiculously good looking. Fortunately for you, I agree with Derek Zoolander.
Did you ever think that maybe there's more to life than being really, really, really ridiculously good looking? Maybe we should be doing something more meaningful with our lives. Like helping people.
All jokes aside, I love and appreciate every one of you who supported my channel and recognize my deep desire to help those of you, my friends all over the world who are trying to gain a better understanding of the housing market and real estate in general. If you're looking to buy, sell, build a home, or invest in Utah real estate, please feel free to give me a call or text. If there's something that stood out to you as being helpful, or if you have questions, please comment below. I would love to hear from you, and I always do my best to respond to each one of you. If you know someone who's thinking about buying or selling a home, please share this video with them, and please don't forget to hit the subscribe button below and ring that little bell to be notified each time I post new videos. Also, be sure to follow me on Instagram at Ty the Real Estate Guy. I'll put a link below. If you found this information helpful, please give me a thumbs up. Thanks for watching, and don't forget to ring that little bell below. It'll make you feel good.